Kia ora everyone, welcome back to our next edition of Econ Talks. Gareth, GDP numbers out for Q1 2021 showing a very strong bounce in economic activity, up 1.6 from that 1.0% drop in the December quarter. So we're coming off a slightly softer base, but actually a really strong result when we were thinking that international tourism, or the lack thereof, was really going to hit the economy over the first few months of 2021. In fact, that domestic spend, households helping to keep things moving by the looks of it.
Yeah, a quarterly increase of almost 5.5% in household spending. I mean, that's a huge number when we look back over the last 35 years of GDP data. The biggest previous increase was 3.5% before we had obviously the bounce out of lockdown last year. So households are really getting out and spending. We saw it in terms of spending on durables, spending on clothing, and a lot of spending on services as well, which probably relates to domestic travel and that kind of thing. But yeah, I mean, it's clear to me looking through the numbers there that the stimulus that both the Reserve Bank and the government have been pumping into the economy, that's helped in terms of consumer confidence and households' willingness to spend. The labour market's held together. COVID isn't here, and so we're all just having a bit of a spend up and a party.
I mean, look, does it continue though? These sort of levels, at least, the actual levels are quite incredible. Is it sort of a part of that surge back from last year as we unload some of that cash that we saved up over lockdown, that we saved up from not travelling overseas? I mean, are those sort of demand conditions going to hold up? And probably just as importantly, no matter if they do or if they don't, will we be able to supply some of this demand, given those supply chain disruptions? It's expensive still to do business. We seem to not be able to find as many workers.
Some suggestion that maybe patches of that spending are related to lockdown and coming out of COVID. Maybe spending on appliances and that sort of thing for the home, which we've seen was a trend throughout 2020. But let's be honest, I think overall, when we look through the spending there, it was a bit softer towards the end of 2020 anyway. And what we've seen since the start of this year is actually picking up new momentum, and it's continued beyond the March quarter as well. The spending data we've got for June to date is looking even better in many respects, actually. So there's still quite a lot of strength there. Can it continue? It's a good question, certainly on the supply side. I think households will find stuff to spend on. They might not be able to get their first choice in terms of what they're looking to spend, but I suspect, given the confidence that's out there, there is still momentum that will continue in that spending. The risk, of course, is that you end up spending but not necessarily getting the same, I guess, volume of goods possibly, because prices we are seeing in some areas being pushed up by those sort of shipping costs and supply disruptions that are plaguing the economy at the moment.
Yeah, and I mean, one of the interesting challenges around that shipping game is that although we saw imports in a pretty poor place last year, they've come back all right this quarter. Exports, though, down 8% from the last quarter on a seasonally adjusted basis. And if they actually, weren't as soft as that, then we could well have had an even more impressive GDP result. The question, though, is what does this mean as we head forward? So we've got better public investment, private investment, we've got better spending activity, all of these changes moving forward. Do we need so much support from monetary policy and the Reserve Bank at the moment, or can we, in fact, expect interest rates to start rising soon?
I think it's quite clear now that the amount of stimulus that both the government and the Reserve Bank pumped into the economy last year is way more than the economy ended up needing. Now, I'm not criticising them for that decision making at the time, because you look at somewhere like the UK and it would have been perfectly appropriate if we had the same sort of health outcomes and COVID outcomes that we've seen over in Britain. But the fact is, because we haven't had COVID here and our public health response has worked out really well, that stimulus has really been, I guess, overdone. And now the question does start to become, when does the Reserve Bank raise interest rates from here? And forecasters bringing forward their picks from the second half of 2022 through to the first half of 2022 now, and probably further increases beyond that will be, coming through as well. So, yeah, quite a significant change in, I guess, sentiment compared to what we were looking at even late 2020. If you think back to October, November, it's only 6 months ago, really, and we were still talking about the potential for the Reserve Bank to cut the OCR further. That's just so far out of the question now, and it's certainly looking to head the other way.
Yeah, and we've seen, look, this resilience in the economy has continued to surprise in a sense. You know, we economists were expecting a positive result at the end of the day for quarter 1, but certainly not this strong. It was 3 times or more than 3 times as strong as some picks. So, I mean, you know, the level that we saw there are quite impressive, highlights that we are still able to keep that economy on track, and certainly just given that it's a better starting position and an immediate sort of resumption in activity. Sure, there's risks about how we might maintain that, but sort of keeping at that current level, getting there so quickly, means that we just haven't had that much scarring across the workforce. We're still seeing enough money pumped into the economy generally. And I do think, you know, there's rising concerns as well over if this economic momentum does roll forward, then we could well have more sustained inflationary pressures. And that's what's going to drive that expectation around sooner rather than later when it comes to interest rate changes. Look, some fascinating trends. I mean, certainly a much better place than we could have imagined this time last year. And certainly it looks, you're hoping in a sense that the good times continue to roll on. We'll monitor those trends and everything else back here on the next edition of Econ Talks.